Hey, good afternoon. This is Trader Tim from eMiniMind.com and I'm doing a trade recap video for the first day in February 2018. Typically, the day after the FOMC meeting announcement on Wednesday is a pretty good day of trading, and that's what we saw today. Even though we were inside the previous day. And I'll run through the trade setups here in the ES as well as the NQ. But the context going into today was such that on the left here, I have a daily chart, and we've been holding, kind of sitting right around this 28.22. And being that this is a daily level, a daily long, the potential for us to hold this and bounce with a move then up to 2900s is pretty strong. But first we have to bounce and break this little cluster of swing highs. So I took a couple stabs at some longs today, as well as a short, and I'll run through those now here in the ES. Clear my drawing first. Make this a little bit bigger. So the day started by opening up in that inside day. And but I kind of had in the back of my mind, okay, day after FOMC should be a good day. Maybe we'll break out. And so the first thing I did, as we opened here, I drew up from lows to highs, and this is all inside the first 15 minutes. The market came down, broke that long, and then set up into a little short up here. And now I typically don't try and fight a daily level. So for instance, right now we are sitting at a daily long, and I typically don't try and short heavily right at a long. But because it was kind of the first sign of the day that we had broken the long and we started to sell off here. We broke the long, broke the swing low. It was worth it in my opinion to take one stab at a short in case we were to just open up and then go trending to the downside. So I took a stab here. The 28.20s was the entry. It traded nicely down to its negative 23% target, and then we proceeded to move higher. Now, one thing to consider when you're, another benefit of trading multiple contracts. If you were looking at this trade and you had one contract and you entered at the 50%, exited at the negative 23, and then drew up the next setup and placed your order, you would end up getting stopped out. So you'd have two trades, one that goes from about 28.20s down to 24, we'll just call it 17s. And so you've got the 3 points out of that, and then you have your stop out, which would be a minus 1.5 points. So you end up, point and a half on the trade. I don't encourage new traders to rush into multiple contracts, but one additional benefit is that, let's say you had two contracts on this trade. You put the trade on at 28.20s, you ran it down to the negative 23% target. You took one off at the target. Now you've got one contract left. Since we've broken swing lows, right at this point here, I will move my stop from -6 down to just one tick above highs. So that was a 20.50. And so not only have you reduced your risk on the entire trade, but then you got the opportunity to take profit on half of your contracts if you got two. And then you're not opening a new trade, putting on new risk here at the next 50%. You're just riding it out, and that second contract ends up getting taken out for half a point. But on the net, you end up a little bit better off than you would with one contract. But the key is to be able to trail that second contract, or if you've got four, you could take two off at the target and trail the last two. But don't let that deter you from beginning with one contract and then moving up in contracts as you begin to improve. So just a little side note on the number of contracts. So then once we came up and broke the short, what I did was just use that anchor point to highs, and we didn't get a pullback. Next high, didn't get a pullback. Next high, finally got a pullback. And so since it was an inside day, and this would have been the first retracement long here that would have held, what I did was, rather than just place a blind limit here at 28, 21 and a quarter, I let it trade. I noted that, okay, it held the 61.8. So then the first thing I do is draw the opposing setup. I want to make sure that we don't just bounce, stop exactly at the 50% and then roll over. But instead, we traded through the negative 61, through the 61.8, which gave me the signal to place the long. We set up in a textbook pullback to the long. So we had the bigger setup trade. It identified that there was participation. We broke the short, the opposing setup, and then the market pulled back into a long. It was a great setup, textbook, but that one ended up selling off from there without really an opportunity to tighten the stop. So second trade there was a stop out, but I would totally take that trade every single time. That's a very, very common setup that happens almost daily. And so that's the kind of progression I'm looking at when I'm trying to identify some of these trades. Let's see here. So then the market started to kind of go into this sideways pattern, but just like I did for this setup here, I drew up the long and I let it trade. The next point in the market was to draw up the short and let that trade. And so what do we have? Well, the market broke through that negative 61.8, and so the short's not valid. And this is something that I don't often do, but because we were right at the daily long, so the daily long is a 28, 22, 25, and I noticed that the market was kind of consolidating. We were making lower highs and then higher lows here on the morning. I actually took a stab at sort of a pre-breakout, if you will. So we broke the short. So then I grabbed my anchor point from lows up to highs and used that to get in a long because this 28.20 kind of lined up right at that daily long. So my thought process was, okay, I've had one winning trade. My second trade, yes, I was stopped out, but there was a bounce initially. We did have a nice clean touch of the 50 and a bounce. So clearly there's buyers around. We just didn't have the momentum in the last trade. So what I did was use that failure of the short, that 61.8 break, as my signal to give it kind of one more stab at a long. So I took from lows to that high. We broke the little swing high back here, which kind of validates the long. Got in here at 20.75s, and then ended up kind of sitting around, chopping around for a while. We finally broke out of highs by a tick, and so I would move my stop up underneath lows. In this case, it didn't really warrant moving the stop because we were, we had traded in about 6 ticks. So we bounced, we pulled back, we finally broke highs again, and that allowed me to move my stop from down here up to just underneath the entry at 20 and a quarter. We pulled back, we retested again. It was a pretty slow kind of grind here, just not doing a whole lot. Then we got the little breakout, and so now we're starting to break some of these previous swing highs, but my stop, since we double bottomed, there was no opportunity to really tighten the stop. But we did hit the negative 23% target. So again, if you're trading 2 contracts, you could take one off at the target. Then you got the second one to trail. Then the market pulled back, double bottomed here again, and then it actually double topped within that. So moving your stop up underneath the double bottom is a good play. Market pulled back again, and then finally we got that breakout. Can move your stop up underneath the next low, and then we got a nice little runner here. We had a couple of pullbacks, opportunities to move our stop. You know, if we get a one candle pullback like this, my stop's down here. We break out, pull back, only one candle and break out. You know, you can still use that as a stop placement, so you can move it from back here up underneath the next swing low, next one, and then finally, once we're here, market makes a new high, pulls back, makes another new high. That moves our stop up underneath this low, and then that's the low that ends up breaking over here and gets us out of the trade. So, even with two contracts, you can do pretty good. You don't need to, be trading 10 contracts to really, gain some momentum and have a big winning trade. You just have to be able to stay in the trade. And the best way I found to stay in the trades the longest is by trailing your stop. So that pretty much, took us through the end of the morning. And I usually don't trade much into the lunch session unless I'm just managing a trade like that. So that was pretty much the morning. And in the afternoon, I just made a couple notes. We had started to break down. Then we broke down quite a bit more, sold off, traded at the 50% retracement all the way down to the bigger 15-minute short. And then the market came back up. It broke the next short. And now we're just currently sitting in sort of the all the way halfway back here on the morning. So tomorrow we'll see if this short holds in the overnight. But as we kind of zoom out to the daily chart and look at the conclusion of the day, inside day, but some pretty good opportunities within that. You can really see the triangle here that I was starting to see in the morning, like so. And that was the reason we were consolidating and we were right at the daily long. So I figured, hey, I'm already up on the day, and so might as well take a stab at getting a little long in here if I can jump the long and then be in it when it does break out. So let's take a quick look at the NQ. I did, because the ES was pretty active today, I didn't have any trades in the NQ, but I follow it side by side, thus you can kind of see the similar pattern. So the first move in the morning, we actually did not end up breaking like the ES did right away. We got an initial bounce. Therefore, this short would be invalid because the long traded first. Then we came down, broke the 61.8, and then the market bounced, traded up to its negative 23% target, didn't pull back, finally pulled back to its next long. But unlike the ES, it didn't get a real serious pullback after that, a little one. It just sort of traded and made this kind of V reversal and then straight down, straight back up. So not really an opportunity to get into that long anyways. But that's why, if you have a couple of markets or, two, the NQ and ES, for instance, sometimes one is trading better than the other or giving you actual better setups. Then the next, from the 50% low to highs, it broke its 61.8. Right here, so you could drop from highs down to lows. That short did set up, traded down below lows, and then the market reversed again. So a little bit different progression. You can see the upward channel here in the NQ versus the consolidation in the ES, like so. But if you've got both markets, you can, if one is trading better, then you can focus on that one. And I don't usually trade both at the same time because they typically trend for the most part in the same direction, and all you're doing is sort of double leveraging your position then. And then in the afternoon, we sold off just like the ES from highs down to lows, but notice we did not make the full pullback in the NQ. Next one came up to its 61.8, had a little bit of a sell-off, and then now we're just sitting in the full halfway back, just like the ES. Highs down to lows, and we didn't quite get there, but I'll call that close enough because of the big sell-off, or the strong push down right after that. So that's kind of the day in the ES and the YM. I usually focus more on the ES just because um, it has a little bit less slippage compared to the other markets. Other markets I rarely ever have slippage, whereas something like the YM can have a little bit of slippage, but the benefits are that there's more entry and exit points because the points and the size are smaller. So I hope that was helpful. Feel free to leave any comments below, and I'll answer those as they come in. Hope everyone has a great weekend, and we'll talk to you soon.